Hi everybody, Alex Player from Expert Forex, and this is a video that owners of the Profit Retriever have been waiting for a long time. They want to see settings that produce amazing results for their Profit Retriever, and that is exactly what I am going to be showing you in this video. Let's have a look at some of the returns being achieved on active trading accounts trading the Profit Retriever, and I'm going to show you the exact settings that we used and explain the strategy in a lot more detail. So here's number one. It's trading a monthly return of 176%. Yes, it's doubling its account every month. The next account has a return of almost 60% per month. Going to look at that one. This one has a return of 20% a month. Now, if you think that's small, 20% relates to 240% a year. That's a huge return. And this one has a return of 62%. I'm sure you want to know the strategies and settings used in these accounts. And lastly, we're going to be looking at one with 28%. So this video is mainly for owners of the Profit Retriever, because you've got to own it to take advantage of the settings that I'm going to be showing you today. But just to give you a background about the Profit Retriever, it's really our best EA for this year. It really outperforms most of our other EAs. So let's have a look. The Profit Retriever makes money from successful deals. Oh, that's no great news. But the power of the Profit Retriever is when a deal goes negative, it recovers those losses by opening a series of additional trades in the same direction as the original one until the total of all open deals goes positive. And then all those open deals are closed. Now, this is sometimes called dollar cost averaging. I use dollar cost averaging for many other types of investments, but it has been used by successful traders for decades. Now, I know because I used it back in 1970 for mutual fund or unit trust trading. Exactly the same concept. So the key components of the Profit Retriever strategies are, and that's what makes this particular EA so good, is it is so simple. You only have to look at three components, and the last component is almost a given. So firstly, there's a gap or a distance in pips for new deals that are opened when negative. So if your deal goes negative, at what point are you going to open a new one? And after that one, at what point are you going to be opening a new one? And that's referred to as the gap. So that you have to get the gap right. Then there's a strategy that is used to increase or decrease lot sizing when a negative run is experienced. And that is best explained when I show you the actual settings that you're going to be seeing, how the lot sizing either decreases or increases. Then the next one is the profit when open deals have to be closed. And that's a very simple one. Generally, most traders close that as soon as possible. So the profit would be something small like $2 or $5. So how do we make money? So the initial successful deals are closed when the price has traveled by the gap size. Remember, I told you about the gap size, with a positive result. So that's how the successful deals are closed. And then good currency selection, high leverage, and a large account is required to trade the Profit Retriever. Now that gives you just a bit of a background into the Profit Retriever. It's a fantastic EA, and let's go on. So in the examples that you're going to see right now, we've used a broker called IG. All these settings have been traded for 24 hours. And the time frame, in fact, doesn't matter because we're mainly trading price levels. But there is an indicator, which is the MA, which is always based on 15 minutes. Now, if you want more information about the Profit Retriever, please go to the link on your screen. I will be supplying links to all of the items mentioned in this video, in the description of the video, as well as in the commentary of the video. Also, the Profit Retriever has produced amazing results in a recent trading competition, as you can see on your screen over there. And it is currently being predominantly used in our linked account service. And as you can see, those green ones that I've marked there are the ones that I'm going to be showing you. I'm going to show you the settings of those And the reason why I've chosen them in general is because they've traded a lot longer than the other ones that are available in the linked service. Now, if you're interested in the linked service, and that means you can actually benefit from the profit retriever without buying it, you merely link your trading account to somebody who's trading the profit retriever, and you can go to the linked service for more information about that. Okay, so let's start with the first account. As you can see, there's a very nice balance equity chart going up. It trades the NASDAQ 100. I must point out that the indexes are a little bit tricky compared to trading Forex because of the pip values and margin values required by brokers. They vary from broker to broker, so that's what makes them quite tricky. But this particular account has generated 176% per month, total return 500. So it has increased the balance on the account 5 times, huge increase. And the pips generated 8,000 pips in 52 days. So it hasn't been trading all that long, this account, but it's obviously highly successful with a success rate, and I didn't highlight that, of 70%. And remember, the successful deals are the ones where you really cash in a lot of money. So let's have a look at the settings used by this account. And there are the settings used. I haven't shown irrelevant settings. I'm looking at the main settings that are being used. And I'm going to talk you through this in plain English. So it's used a 4 simple moving average. It's interesting enough, it's reversed the direction of trade. So if the moving average says buy, it says, no, I'm not going to buy, I'm going to sell. So that's an interesting strategy that was used. And then the price gap, because this is an index, is actually quite big. So the price gap is 120 pips. But as you can see there, the 120 pips has stayed constant throughout the strategy. So there's no change in the 120. But so let's start looking at the actual position sizing strategy, which is the important one. So it started with lot sizing of 0.09. Now, I think I forgot to mention here that accounts of $10,000 were used on all of these accounts. So you need an account of $10,000. If you don't have a spare $10,000 lying around, you can use cent accounts. Now, with a cent account, $100 becomes 10,000 cents, and therefore you can trade this EA using cents account. So there we are. It starts with 0.09. Then it goes down to 80% of that 0.09. So in other words, you take that 0.09 and multiply it by 80%, and that's the next lot size that the EA will trade. And then the next one will be the same. You multiply it by 80%, and on you go until you reach your target lots of 0.02. So the 0.9 goes down to 0.02. And when you reach that 0.02, then the EA starts reversing. Then it actually increases the lot sizing by 130%. So you multiply 0.02 by 130% to get the next lot size and the next lot size and so on. And then you stop. They're the target lots for phase 2 for 1.5. So it starts with 0.09, goes down to that level, and then works its way back to 0.15, which is higher than where it started. Interesting strategy. So it has a reverse martingale initially, and then a martingale, but it stops at 1.15. Obviously, it's a very successful strategy because it's generating a lot of money. And then, as I said, the closure of amount is important in it. And here we're saying when all those open deals, those open negative deals, go positive by only $20, then close them. That's what that setting is. So there's the settings that I spoke about earlier. It's basically the moving average, the gap size, the strategy here, and then the closure over there. Very simple EA. And as you can see, and let's just go back, it has produced phenomenal results, absolutely phenomenal results. Okay, so let's go to the next account that we're going to be looking at. And again, a very nice equity chart. But the big difference here is we are trading a normal Forex cross for a change. So things should be a lot simpler here. The monthly return on this one is just under 60%. The success rate is 66%. Lots of pips. 10,000 pips generated by this strategy. That's amazing in 108 days. So that's how much? 3.5 months. That's more or less that. So again, very successful strategy. You can see it doesn't have any much of open trades at the moment. So very successful strategy. Let's go and have a look at the settings used by this strategy. Okay, so we go back. This one's also using a 4 moving average. It's also, interesting enough, reversing the direction of trade. So the moving average says, buy, buy, buy. It says, no, my trader has told me to reverse the direction. So it actually reverses the direction. Then it has a price gap of 26 pips. A lot smaller than the previous one because the previous one was an index. This is a Forex cross. So and again, that gap was kept constant throughout. Now, let's have a lot size. So it started with a lot bigger lot size. I mean, it started with 1 lot compared to the previous one of 0.09. It changed by a 90% factor. So it took that number and multiplied it by 90%, and that would be the next lot, and then it multiplied by 90%, and that would be the next lot. And then it goes right down to 0.04. And when it reaches 0.04, it then reverses, and it says, now I'm going up again. So it goes 140% of 0.04. This is the next lot. Then 140% of that is the next lot, and so on, until it goes back to where it started. So isn't that an interesting strategy? Pretty similar to the previous one. It goes down and goes up. Very interesting strategy. And this one says close the open trades when you get to $60 positive. That's quite aggressive, but obviously it's working quite well. So there are the settings for that particular result, and let's just go and look at those results again. So those settings have produced that nice equity chart, balance chart, and have produced those phenomenal results. Also a 450% return over the 108 days. All right, so let's go and have a look at the next one. And by the way, here's the link. So these accounts come from the linked service. So you can actually just go and follow them as they are going on. So here we have another one that is an index. The indexes appear to also favor the profit retriever quite well. So it's trading the US 30. It has a return of only 20% per month, but that again, as I've mentioned, is a very good return. And what is good about this account, it has a record of 176 days. That's almost 6 months. So what it's saying is this is a robust strategy. It does pretty well, and it's generated 30,000 pips. Total return of 188%, almost doubled the account twice. So good, again, great results. So let's go and have a look at the actual settings. Because this is an index, you get some funny numbers coming out, and here is the moving average at 354. And again, I think this was an optimized setting that was used. So a lot of these settings come from the paid forums, the premium paid forum where we supply these settings, and we just adjust the initial lot sizes and things like that. But these settings come from those areas we start with. Okay, so this one trades the same direction opposed to the previous one, and then the price gap is 150 pips. Now again, I must emphasize that index trading is different from Forex trading, and that is why these gaps seem so big. Then here we go. So the initial lots were 0.12, so a lot less than the Forex ones that we've seen before, and that is because indexes are more dangerous. You start with a very small lot sizing. And again, similar, they decrease the lot size to 80% of the previous one, and it just goes down 80%, 80%, until it reaches 0.01. Then it says, hang on, I'm going to reverse this thing. And it then then it increases the lot sizing by 130%, then until it reaches 0.15. Now, can you see the consistency of successful trading techniques? There is a decreasing start and then an increasing start. So far we've seen three, and they have the same strategies. And this one says, okay, close the minute you are $10 in the positive. So it's getting out a lot faster than the other ones. Okay, so I hope this was starting to make sense to you. Let's just go back to the results that we were talking about. Here are the results. You can see this one is a little bit jerky. Those flat periods are when there's a drawdown. So initially there were a few flat periods. Then what the trader must have done is change some of the settings to prevent these long drawdowns, and then you can see those periods have decreased tremendously. So these settings you're seeing now are change settings where the trader has actually looked at what's going on the charts, saying, oh, the reason for this is the gap size is either too small, or the initial lot sizing is too big, or whatever, and they have made the changes required. Okay, so let's have a look at number 4. All right, and here's number 4, and again, it's a Forex cross, and I love the Forex crosses. They are not that, they are less tricky than the indexes. And again, if you look at this profile, you can see in the beginning, the trader battled and then started refining the settings, and now it's starting to smooth. The balance chart is starting to smooth. So you must take that into account. And that's the advantage of joining the linking service, is that the trader is not static. They don't just plug settings in, they manage those settings, and it's quite clear in these charts that is happening. And this one is trading the Aussie yen. It's generated 60% return a month. Now that's a lot of return. Total return has doubled the account, more than that, and success rate is 68% with pips of 4,100. So good, solid strategy, especially at the end here, where this is starting to smooth a lot better than in the beginning. So let's have a look at the settings that are being traded today. And there we are. And again, 4 is the moving average. It's trading in the same direction. So we've had 2 reverses and 2 same directions. The gap size is 24. And this is almost what I would call a normal setting. So that is a normal setting. 24 is a reasonably good setting. And then the initial lot sizes, I can tell you now that this trader started with much higher lot sizing and has decreased it to 0.8. Again, very similar to the previous strategy. The lot sizing decreases to 80% of the previous one, 80% of the previous one, 80%, and until it reaches 0.1. Then it increases by 130% to 0.8. Now, I'm pretty sure you can start noticing a clear consistency of trading strategies. It's almost as if the only variation is basically, especially on Forex, is the gap sizing, but this is more or less very consistent. And then again here, the closure amount is down to $10. So very easy EA to trade. All you have to get that is almost what I would call a standard setting. You can almost trade any Forex instrument using these settings that are shown here. The only thing is that if you are using higher volatility currencies, your gap sizing should be higher. Okay, so I think it's starting to make sense again. Let's go and have a look at this. And as I say, obviously this trader has corrected themselves over time, and there are the results. Now, to be realistic, when trading the profit retriever, most traders are looking at 10% return a month. So 62% is very high, but as you can see, the more you trade, the bigger your account becomes and the less risk you actually start incurring. But when you join the linked service always assumes that the account balance is $10,000, the starting balance. So even if this goes to $100,000, the trader will trade it as if they're trading a $10,000 account. So let's go and have a look at our final account. So here's our final account. And again, if you look at the graph, you can see a period of drawdown over there. And then the trader has said, no, I don't want those kind of long drawdowns, and has changed the settings to make it less risky. And it's not a rocket science to change those settings. All you do is you increase the gap size and you decrease the lot size. That's all you have to do, and then your equity charts start looking like that. So the return is 28% per month. Only 44 days history, 4,000 pips generated, 1% 66. The 1% with the profit retrievers is more or less in that area all the time, so it doesn't vary that much. Okay, so let's have a look at the settings used by this technique. Now, interesting enough, this is a Forex cross, and it uses a very, very high moving average. I'm quite surprised. Now, how do these moving averages work? If it's short, like 4, as we've seen with some of the others, it means trade the most sensitive change in trend. So in other words, it will look at only 4 candles back, and it will say the trend for the last 4 candles. But this one will look 360 candles back. So it will get a very smooth moving average, and it will be a more with the trend type of trade. Now, in spite of this trader going forward with the trend setting, what happens is it is reversed. So if the moving average is saying buy, 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 the EA will reverse the direction. So interesting, isn't that interesting? And you need to bear that kind of thing in mind. The price gap is 20, which is normal for a Forex instrument. And then the lot sizing, see, this one started with 0.4. So it's must probably been lowered to 0.4. So that's where it's starting. It then decreases. The next one will be 90% of 0.4. The next one will be 90% of that one, and so on until it reaches 0.01. Again, when it reaches 0.01, it increases by 130% until it comes right back to 0.5. So there is a very consistent theme in the strategies used by these high-producing EAs and strategies. And then the closure amount, as you can see, that's the smallest one we've seen so far. It says once you get remotely positive, just cash everything in, and that's not a bad approach to follow. Now, I must explain from the reverse direction, same direction. The profit retriever, the direction is not that critical, because if the initial trade is right, it's no problem. If it's wrong, it will just go into a recovery mode. So some people spend a lot of time trying to get the direction right. It's not worth spending time on that, because the profit retriever has a built-in recovery. That's why it's called the profit retriever. It will recover any mistakes that you've made. So if you're not already the proud owner of this profit retriever, the most robust EA that we have so far, please go and have a look at this marketing page. It gives you a lot of information about the profit retriever. If you're more interested in following successful traders, please go and have a look at our linking service. Using that service, you can link to successful traders. And as I've mentioned before, if you don't have a spare $10,000 lying around, you can link to them with $100 using cent accounts. Now, I'm quite excited about this video, because seeing those successful strategies and seeing the consistency of those successful strategies, where they go down initially and go up later on, and use conservative lot sizing in those strategies, and the gap sizing is normally quite conservative too, and the cash-in amounts are conservative. It's starting to tell the picture of how the profit retrievers should be traded, and the results that you've seen are still very excessive. They're too high. So what it's saying is that maybe those results should even be toned down even more. So if you're an aggressive trader, you would increase the risk by decreasing the gap sizing and using bigger lot sizing. So that's if you're an aggressive trader. If you're the kind of trader that wants to trade the same way for the next 3 years, then what you do is you increase the gap size and you decrease the initial lot sizing. That's how it works. So it's a very flexible EA that meets the profiles of the traders that are using it. So I hope you've learned quite a lot from this particular video. I hope owners of the EA, hope a light bulb has gone on with this decreasing strategy and then increasing strategy approach. And it's clearly shown in the linked accounts where most of those accounts are using. So from me, Alex Deploy, cheerio.